You might not realize it yet, but you are sitting on one of the most powerful tools available to anyone to build wealth in real estate. If you are a military spouse or a veteran, you have access to leverage the VA loan in parallel to your military career or your military transition. And this is not a one and done type deal. This is a wash, rinse, repeat process that you can build over time. So, in this episode, I'm bringing you a VA loan expert to talk to you about how to build a real estate portfolio throughout your military career or your transition using the VA loan. I'm Kimber Hill, and this is my military lifestyle show where I talk about how to thrive as a military spouse or in active duty life. Okay. I cover topics like remote work, investing in real estate, and other resources that will help you live this military life to the fullest.
Hi, everybody. Happy Tuesday. This is a great day of the week. Everyone is so productive on Tuesdays, and I know we are all here to represent each other and support each other. Before we dive in, I want to show you who's hosting the conversation and why it matters. So, you are here with the Military MLS. That's me and my team. And what we are is a concierge style service. It's built for military families by military families. We are military founded, membership based, and most importantly, we are a community. We are a digital community and we specialize in helping the military community learn about real estate investment and achieve relocation support from people who have been through it themselves. We created our platform, the militarymls.us, and this platform is to help military families get real support and guidance when it comes to PCS moves, investing in real estate, and making the most of your VA loan benefits. On our platform, you can do things like list your home for sale, list your home for rent. You can even tap into previous education events like this one, and you can even list your cars, vehicles, vessels, and RVs. And our core value is that this will be forever free for you. You will not have to pay to make listings here. It is intentionally built for the community to help each other. So if you are like most members in our community, you've probably Googled and you've landed on whoever has the biggest Google Ads budget to steal and capture your Google attention. Maybe you've talked to a lender or two. Maybe your lender has pushed you into a conventional loan when they don't really fully understand the full benefits of the VA loan. And you're just not quite sure what the heck you're doing or what your options really are. So I want to help you focus on your family's timeline and your financial goals. To clarify, just so everybody is on the same page, that is where the Military MLS concierge team comes in. We have one-on-one strategy sessions. They're about 30 minutes long. And all we do is talk about where you are in your life, where you are in your finances, and what strategy can we implement to help you start building real estate investments. And what we do out of that is we give you actionable steps and we connect you to military trusted and military connected lenders and agents who understand our lifestyle and are vetted experts in the VA loan space. And we've got two of them on the call today. In fact, today's event and our VA Loan Bootcamp series, it's 100% made possible by Newrez. Newrez is hands down one of the best VA lenders that we've worked with. And you are going to hear a lot from them today. All right, Francis, we'll bring you on.
Hi. So my husband and I have used the VA loan a couple times. We most recently used it in Newport, Rhode Island to actually buy a multifamily home. So we were really excited that we could still use that benefit for that.
No way. Are you
Yeah,
loving it?
we do.
I'm so excited for you. That's my dream. My husband won't let me, but but that's awesome. Thank you, Francis. Jennifer.
Hi, Jennifer Rubel. I'm actually from Fort Bragg, North Carolina, trying to move back home to my hometown. I actually spoke to Kimber earlier today and yesterday regarding our situation. And our situation is that we are finding pushback using this VA loan outside of
Yeah.
military town.
Yeah. That's so
Lots of
interesting.
feedback.
And Michelle and Austin are our experts today. I've briefed them on your situation, and I cannot wait for everybody here to learn what
Yes.
you're going through. So we're
It-
going to tackle that in about 10 minutes.
awesome, because I'm at this point, if this doesn't work out for us, I want others to know how to get over this hump.
Yeah, absolutely. Cassie, you can go next. I'm excited for everyone to hear what Jennifer's going through. It's very serious. Cassie, you can go next.
Yeah, so I am currently in Tampa, Florida, but we first used our VA loan when we were stationed up in the Panhandle, and we were actually able to turn that first property into a short-term rental. So it's provided, a lot of extra income just from that one property. So it's been really great.
Oh, I love that, Cassie. I'm in the Panhandle now as well, so it's a really great place to invest. Thanks for
Definitely.
sharing that. Anybody else in the Panhandle? Let's hear it for Florida. Elizabeth, you can go next.
Hi. So we bought a house back in 2014 using a VA loan up in Bremerton, Washington. My husband actually retires next year. And so we're looking to possibly purchase in Texas or Florida. And I actually had a question because he's been talking to a lot of people that have retired, and they said, make sure you purchase a home using the VA loan before you get out.
Ooh,
So that's
yeah.
a question we have, if that's necessary or if he can
Okay.
retire and still what would be easier, what would be more beneficial.
Okay. Awesome. Why don't we start Q&A with that in just a few minutes? Let's get I love this question. Thank you so much, Elizabeth. Let's get going into what Michelle and Austin have for us, and then we're going to tackle your question, okay? So, regarding Texas or Florida, just still trying to decide which one's right for you?
Yeah, we
Yeah.
we have two kids, very active in club sports, and of course, weather's a huge thing for us. We want the outdoor activities and close to family, so we're just trying to pick whichever is the best.
Oh, wow. Elizabeth, I'm really excited for your upcoming transition and challenge. So,
Thank you.
yeah, I have two kids as well, so I understand you've got to get the environment right.
Yes.
All right. Thank you, everybody, for participating in the icebreaker. So, without any further delay, I want to introduce you to my two VA loan experts, and that's Michelle Crumley. Hi, Michelle.
Hi,
She is,
everyone.
hey,
Can you
she's
guys
a,
hear me fine?
yeah, we've got really good
Perfect.
audio on you. Thank you. She is a fellow military spouse. Military spouses in the house, give me a heart in the chat. And she is also the director of VA education and policy at Newrez. Kind of a big deal. Okay. And then we have Austin Wolverton, who is a
Hello.
veteran. Hey, veteran. Hey, Austin. Sorry, I called you veteran. Hey, Austin. He is also the sales manager at Newrez. Where are my veterans at? Give me a gold star in the chat if you are a veteran. I want to see you. Michelle and Austin, you're on screen. We can hear you now. Let's start with your backgrounds.
So I'll jump in, ladies first, right, Austin?
That's correct.
I am, as Kimber mentioned, I'm now a 30 plus. I stopped saying how many years a little while ago. Military now, veteran spouse. My husband retired from the Navy a little over 15 years ago now. And I have been in this crazy mortgage industry for now well over 20 years with a passion and a focus all around our community, our military and veteran community, and the VA loan. Because as we see in the questions, there is so much misinformation. And having sat at my second closing and not understanding how I got there, why I was using this loan, I decided I was just going to get in the industry and educate my fellow comrades in the loan program itself. And that's what I've been doing for 20 some odd years now.
I love that. Thank you, Michelle. All right, Austin, let's hear a little bit about you.
Hello, everybody. My name's Austin Wolverton. I was in the United States Air Force from 1994 to 1998, and I have been in the mortgage space ever since. So 25 plus years in mortgage. Have utilized the VA benefits myself. Come from a big pro-military family. My grandfather was in the Army Air Corps. My brother-in-law was in the Navy, and I'm proud to say my son has just joined the Air Force and will be going to basic training in August. So
Wow.
love to help you guys. I'm here for you in any capacity.
Do we have any Air Force connected people in the house? Throw a star in the chat if that is you. And congratulations to you and your son. I'm excited to have you both here for the conversation. I think that's obvious. So let's talk about the VA loan first. So this question is for Michelle and Austin. We're going to lay the groundwork and then we're going to get to Q&A. My first question, Michelle and Austin, is tell us elementary style, what is the VA loan in a nutshell?
So I think that there's a lot of people that don't quite understand, right? So the VA, the Veterans Administration in 1944 wanted to figure out how to help our servicemen and women returning from World War II to buy a home. And they decided to do this through guaranteeing the loan to the investor. So what the VA loan does is it guarantees the first 25% of the loan in case the service member or the veteran default. And then VA comes in and pays up to 25% of that loan in a claim to the investor for making that loan to begin with. Mm-hmm. So that's why with VA loans, you don't have to have mortgage insurance, because VA is taking that role of insuring that loan against default with the investor. So that's all it is. VA does not do the loan. They aren't backing, they aren't funding the loan, they're not closing the loan. All VA does is come in at the end of that transaction and guarantee it to the investor.
Absolutely. And so for those of you who have not done the VA loan before, if you've tried to go get qualified or quoted for a conventional loan, especially if it's your first purchase, you're looking at anywhere from $100 to $300 a month in mortgage insurance. You don't have to pay that with the VA loan. And that's one of the big perks of not having to have mortgage insurance. Okay, sorry to interrupt, but that also kind of reminds me, Michelle, about other fail safes that the VA has in place for you in case you get in a situation where you get orders unexpectedly and have to short sale your home. Do you want to speak to that at all?
Sure. So the military, especially for our active duty, right? Our veterans are a little bit different. They are now out of the military, making their own decisions, where when you are in the military, they're defining what you're doing, when you're doing it, and where you're doing it. And VA has a process that if you receive like unexpected orders and the market has significantly shifted and maybe you are underwater and you need to sell, they will review the situation and will agree to those short sales, those compromise sales, in essence, ensuring that the lender is ultimately made whole through that claims process, but that they are willing to have conversations and see what's possible when you have those kind of situations pop up. They really want to make sure that we are avoiding foreclosure whenever possible.
Absolutely. So it is a fail-safe system that's in place to support you as a veteran. Okay. So anything else that you or Austin want to add on the foundations and fundamentals of the VA loan?
Austin, anything you would like to add?
I think obviously one of the big ones is there's no down payment requirements for VA purchase. So it allows people, especially just getting started, to purchase their first home with no money down. And that's a very big benefit, I think. So
yeah. And I think that makes them more accessible too, because if you're coming at it from a conventional loan standpoint, it's typically required that you provide a down payment.
That's exactly correct.
Yeah. Yep. And what about our eligibility requirements and what that means for our active duty service members versus people who are out of the service?
So for our clients that are out there, right? So as an active duty service member, you become eligible for your VA home loan benefits as soon as you have served 90 days active service. 90 days. If we ever get downgraded to peacetime again, which we haven't been since 1980 something, then it becomes 181 days. But historically and for the foreseeable future, it is once you have worked 90 days active service, you become eligible for your home loan benefit. Once you've exited the military and you are now a veteran, then as long as you have served at least those first 2 years, like in essence, your first contract, right? And you have either an honorable discharge and some other than honorable with research can still retain their benefits, but honorable, no problem. Or if you have a service-connected disability, right, that they medboarded you out because of a service-connected issue, then you retain those benefits. So I would say that the vast majority of individuals that have served longer than 90 days and serve their first term, right, that first contract, and they are eligible for and retain their benefits upon exiting the military.
Thank you. I swear I learn something every time I talk to you, Michelle. And what I just learned is that the peacetime is 181 days, whereas the status that we're at now as a nation is 90.
Yep.
So what that means is if you are freshly in and you've worked for only 90 days, you qualify. And also what that means for me is I need to stop telling everybody it's 181 days, 90. Thank you. Can we speak to entitlement? I want to get to some basic myth busting, and then we're going to open the floor for Q&A because we have a ton of questions coming in. But before we do the myth busting, can you speak to entitlement for a moment? Explain what it is. And also, let me say this first. If you need to know your entitlement, we need you to book a strategy session so we can help you. So Michelle, please explain it. Katie, please drop our strategy session link in the chat as well.
Okay, and Austin, are you good if I take this one? Because I talk about it every day.
You're so good at it too, so the floor is yours.
Okay, so when I talk to our service members and veterans about entitlement, because nobody understands what this is, you hear you have an entitlement and what is it? So when I actually am talking to individuals like today, I just say, hey, when you've earned your benefit, you are given, in essence, an entitlement bank. And your entitlement bank is either full, partially full, or empty. And full, all that means is you do not have a current VA loan that is out there, that's outstanding, right? So maybe you've had one, you sold, you paid it off, and you've restored your entitlement back, but at the moment, you have full entitlement. And what VA said with 2020 Blue Water Navy Act is if your entitlement bank is completely full, then there is no max loan limit for what VA will guarantee. You have to qualify for it, but there isn't a max that VA will hold you to in what they're willing to guarantee. That being said, 2 years ago, the largest loan going through VA's pipeline was $9 million, 100% financing. Okay, exactly, right? And that was 2 years ago. Imagine what it probably is today. And it was up in the Pacific Northwest somewhere. And so if you have full entitlement, the sky's the limit, right? You just have to find the lender that's willing to do a $9 million loan, right? And you have to qualify for it. But if you've used your VA, right? My husband and I, we lived in Virginia. We did a home, we bought a house in Virginia Beach using our VA. We got stationed in Kodiak Island, Alaska. We wanted to use our VA there, right? So it was like, okay, you can do that. It just depends on how much entitlement you have left. Because when we did our Virginia Beach home, we closed. VA reached in and took out some entitlement from our entitlement bank and put it on that loan. And as long as that loan is out there, that entitlement is attached to it. So some entitlement was used. So then it's all about how much entitlement I have left as to that second or third or fourth VA loan that I might do while those other VA loans are active. So we've had 2 VA loans at the same time. I've worked with a client that actually had 5 open active VA loans that they had acquired over the span of 20 some years because of how entitlement is used. And then if you do a $9 million home and you use entitlement for $9 million, your entitlement bank is absolutely exhausted, and it's going to stay exhausted until I either pay off that $9 million loan, sell the property and pay it off, or over the time values go up so much that the minimum or the maximum loan amount increases across the conventional conforming landscape.
Yeah. Thank you so much for putting that into perspective for us. Stacy asks in the chat, how can we tell how much entitlement we have left? Stacy, we need you to book a strategy session with Newrez because a lot of things vary on your personal situation. So for example, I was just working with a military MLS member. We did some research on our own and we thought that we knew how much entitlement we had left and how much she could spend. But when we got on a call with Michelle at Newrez, there was actually another $100,000 on the table. So you can go get a certificate of entitlement and then take it to Michelle or someone at her team, and they will tell you exactly how much you have left and can spend. So Michelle and Austin will be able to talk about a few things. She's already addressed, can you use the VA loan more than once and how many you can have at a time? So let's start there, Michelle. I think we kind of have the same bullets here to cover. Where do you want to pick up?
So I think we took care of VA loans are small. I mean, if someone thinks that a $9 million home is a small loan, then I want to be adopted, please. So one of the things, and Austin, I want you to speak to this, that VA loans take longer to close and process than conventional loans. Is that true?
That's categorically false, Michelle. We can close a VA loan in exactly the same amount of time as any other form of financing, whether it be conventional or not. So
I love that. So that whole idea that if you go VA, oh my gosh, it's never going to close, it's going to take longer. That is categorically false, is what I just heard.
Categorically.
If you are working with a realtor or a lender who is not a VA loan expert, you may hear this kind of negative talk when it's not the case, and that it may be used to push you into a situation where you don't use your VA loan benefit. So my feedback to you on that is, if that's the direction you're getting pushed, just take a second and pause and ask them a few questions. Michelle, what are some really strong questions that we can ask someone to validate or verify if they are really an expert in this product?
That is wonderful. And I think truly when you are interviewing, and it should be an interview and conversation, real estate agent, right, as well as a lender, I would ask a real estate agent, one, tell me how many transactions that you've done that have had and used the VA loan. I would want them to explain to me what the appraisal process looks like. And if they can't talk about some of the specifics about what happens if what's tidewater, they can't explain. And that's a key word. If you say what's tidewater and the real estate agent looks at you cross-eyed, run. If you ask, do they or how many reconsiderations of value they've done, and they don't know what a reconsideration of value is, run, right? If they are telling you that the MPRs, these minimum property requirements that the house has to meet, that it's not going to work, ask them, are they aware of the MPR waiver process? And again, if they are like, what? There's no waiver process. It's either yes or no, run, right? These are individuals, and again, not because they are trying to deceive you, they don't know, just like you guys don't know. And so lenders, right? The same questions. Can you explain entitlement? Can you explain how I can have 2, 3, even 4 loans at the same time? If they can't provide that information, right? Can you order my certificate of eligibility for me? And they're like, oh, what? No, you have to get that. Then you're talking to someone that doesn't understand. And I always laugh and say, if your loan officer, for my active duty service members that are out there, if your loan officer asks you for a pay stub, run. They are not comfortable, knowledgeable about the military environment and the fact that we have LESs, not pay stubs, right? So listening for that lingo, asking some questions about the VA loan that you know that are a little bit more detailed. And if you don't get the answers that you expect, that's not the lender or the real estate agent for you.
Yes. Thank you so much. Do we want to talk about the funding fee and whether it makes it complicated as our next myth that we're going to bust? We've got 2 more myths to bust, and then we're going to open Q&A.
Austin, do you want to take the funding fee?
Yeah, gladly. To answer your question, no, it doesn't make it more complicated or expensive. I mean, there is a funding fee that you need to pay in conjunction with using your VA loan benefit. However, it's important to know that VA loan rates are usually drastically lower than conventional loan rates. So they usually offset the fact that you're paying the funding fee because you're getting a much better rate and you do not have mortgage insurance. So
Yeah, and just to add on to that, just to Tish, when you talk about this VA funding fee, because I've heard this a number of times that, oh, don't go VA, you're paying this big fee to the lender or the loan officer, they're banking it. And I'm like, golly, I wish if they had, I would not be working anymore. I'd be retired if I was actually collecting that. But a lot of individuals don't realize that the VA loan is not a government backed loan, government funded loan. So no taxpayer money goes to fund that home loan benefit. The VA is able to guarantee these loans and allow for no down payment and no mortgage insurance because that funding fee, if you owe it, that funding fee is what VA collects and puts in their entitlement bank to pay claims that come due so that you don't have to make that down payment or that lower payment. And then also that lower monthly payment because of no PMI. And that's if you owe it, right? And VA knows that's a hardship. It can be a hardship to come out of pocket in cash for closing costs. And they know that the funding fee can be, it could be, if you're a subsequent user and still owe it, 3.3%. And so that could be significantly high, especially on a $9 million house if you owed it. VA says we understand that. And if you don't want to pay it in cash up front, that is fine. You are allowed to finance into your loan, your purchase transaction, finance into your loan that funding fee and pay it over the however long you have that loan. VA still gets their funding fee after closing, but it's ultimately financed into that loan. So you're not having to come out of pocket with the other closing costs.
I was just going to comment that as a personal VA loan user, I've done it both ways, where I financed my funding fee into the loan and then another way where I paid it at the closing table. So it's really nice to finance it into the loan. You barely notice it. Go ahead, Austin.
yeah, sorry about that. I was just going to add that even at 100% financing, the VA allows you to stack the funding fee. So
Yeah, that's awesome. So what about the myth that if you have a VA loan, you can't rent your home out?
Go ahead, Austin.
boss.
Yes. So VA, while it is an owner occupied primary residence for purchase and for most of the refinance options that are out there, VA wants it to be owner occupied. VA does not care after you've occupied it. If the next, you move, you get orders, you're retiring, whatever that situation, VA says you can absolutely rent out your home. You can convert it to an investment property. You just can't buy it with the VA as an investment property.
Wow. Thank you so much. And so for those of us who are thinking about how long we can stay in the property before we rent it out, are there any restrictions around that with the VA loan? Like you have to be in it for 5 years or et cetera?
So are you okay if I jump in here, Austin?
You're good. Yes.
Okay. So with the time frame, VA has not set a specific time frame. Ideally, they would like to know that you are going to be there for, let's say, 12 months. That's the plan, right? But they also know life happens. And as long as it is your intent to occupy, which you actually have to attest to at closing, and you have the ability, right? We've validated that's where you live, that's where you work, this is where you're PCSing to, we have your orders, you have the ability to occupy, you have the intent to occupy. That is what VA is concerned about the day of closing.
Thank you so much, Michelle. And we call those life events. So if your family is growing in size, which I have personally been through this, we purchased a home and started to grow our family and realized the home that we had selected is no longer going to work. We have to find a new one. And we were able to leverage the VA loan twice to do that in the same duty station within a 12-month period of time. So absolutely. Paul says, I'm looking for a local agent. Paul, let us match you at the military MLS with a military connected realtor in your area. So Paul, we are going to reach out to you after this. And April asks, the next obvious question is, can you move out and purchase another home in the same location if you need a bigger home? But let's address that a little bit further, Michelle. Let's talk about April's kind of specific scenario of if she needs to leave and get a bigger house.
Absolutely. So we've had individuals in the same community, right? So not even just, in the same neighborhood that was in a townhouse and got married, now have a child, and they are
Yeah.
still buying in the same community, but now it's a single family home. It makes logical sense, right? It's bigger, it's got a yard. It has to make sense. We've had individuals that have gone from their 5-bedroom home, they're empty nesters now, that have moved, downsized in within, there's not a radius that VA has in place. So it's not about distance. Does it make sense that if you're keeping your existing home and you are buying in the general area, that we can logically believe that this is going to be your owner occupied home that you're going to attest to, no committing mortgage fraud, right? That you can attest that you are going to owner occupy. Does it make logical sense that you would do so?
Right. So good. So good, Michelle. I feel very confident to open the floor for Q&A right now, but Austin, I heard you speak up. What did you have to add?
Yeah, I was going to give another example. We've even shown where families who are growing family size and now having school age children where they've been able to move just for school districts too. Like I said, it's like
Yeah.
Michelle said, if it makes logical sense to the underwriter and VA doesn't have a restriction against it. So
Yeah, absolutely. All right. So those of you who think you want to contact Michelle and Austin to have a look at your entitlement and your next steps, I would like for you to go ahead and schedule your strategy session. So Katie will drop that link. And if you've already filled the form out, we're kind of progressively, we have our concierge team working on the back end to contact you. So you're going to be getting an email and a text message from us. And we're working to try to get you scheduled during this event. So you leave this call like with your appointment. And I'm going to work through it. I think, was it Elizabeth who came on first and had that quick question about, yeah, there you are, Elizabeth. I think yours is a great place to start, and then we can move to Jennifer. So why don't we start with your initial question?
And that was about the timing with retirement, correct?
Yeah, whether or not, because we're just trying to decide if once we do decide which will be in the next month or two of where we want to be living, if we should start looking into purchasing the home the year before he gets out of the military, or if we are able to, if it's an okay option to purchase it after he retires. What's the better?
So there's a lot that happens, right, when you start thinking about retirement besides anxiety.
Yeah.
But when we talk specifically about the VA loan, so just because you are retiring or have recently retired doesn't mean you can't use your VA. But what you're hearing, and the reason that you're hearing that you need to do this ahead of time, is VA, when we talk about qualifying income, for income to be able to be used, it has to be stable, reliable, and likely to continue. And what VA says is if you are getting out within 12 months of the closing date of the home, then your income is no longer stable, reliable, and likely to continue. VA says, we know you're getting out of the military. So your active duty income cannot be used for qualifying. If it's because you've served 20 years or more and you are retiring, we can absolutely use your retirement income, which we know is going to be a little bit less, right? Worst case situation, you stay in, your income's higher. But if you are retiring, you are exiting the military, right? And retiring, you're going to receive retirement pay. We're going to know exactly, we can figure that out on paper with a calculator. We know what that is, and we can use that for qualifying. If you're within 90 days, like say you're closing and within 90 days, you're starting a new job, we can also at times look at what that job is. Is it something that you're liable to be successful at? Is it standard pay? Is it, and as long as that future income is going to start within 90 days, that future income many times can be used. But where you're hearing and the concern being, and a lot of people don't know this, especially if they're not retiring, is they waited too long. They're 6 months away from getting out of the military and they want to buy a house. And it's like, well, we can't use your active duty income. So what are we using for qualifying? And I think that's what you're running into. So yes,
Okay.
Then the next question is, are you retiring where you live now? Because if you are buying elsewhere, right now it's how long before you can occupy? And VA says that you reasonably have to occupy within 60 days. That's what they consider reasonable. They will extend it up to 12 months, but not beyond that for specific situations that can be documented. But usually it's 60 days. With an exception, it can be pushed to a year as long as it makes sense. But what you're running into or what you're hearing has to do with the active duty income and qualifying.
Okay, that makes total sense. That helps me a lot. Thank you so much. I appreciate it.
You got it.
Elizabeth, what did you say your exiting timeline was?
He starts terminal leave in April of next year.
Okay.
And so we're trying to decide if maybe the kids and I go ahead of time because they're homeschooled. So we have the flexibility to be able to do that. So there's so many, we're just like, there's so much going on and so much unknown. It is really scary, but we're okay.
So like theoretically, does she fit within the window, or does he need to look for like a 3-month extension so that he can?
So if he can qualify on just the retirement income, right?
Okay. Yeah.
If he can qualify on his retirement income, because we're within that 12-month time frame,
right,
all day long, not a problem. If he needs the active duty income to qualify, that's where you're going to run into problems right now.
Okay. No, that makes sense. That's awesome.
Okay.
Thank
Elizabeth,
you.
I hope that we see you book a strategy session. And
I
see
already
if you-
did. Yes.
Oh, yay. All right. Well,
Thank
look
you.
for our email or text to you. We're going to try to get you scheduled before the call is over. And now, you guys,
Thank you.
we've got to hear from Jennifer. My heart goes out to her and what she's going through right now. But let me ask you, let me just say this. You learn faster in group environments, and that's why we're building this community. We learn faster together. So let's listen to what she's going through and have the Newrez team support her through this.
Okay, so if I miss anything, Kimber, you're very aware of the situation, so I do apologize if I do miss it. Any of these, anything that happened to us in this situation. My husband and I are very good at our finances. I also think, very good at our finances, and have prepared for the situation probably about the last 5 years, knowing that we were probably going to purchase a home in between that window where his disability might not come in, but his employment will be there, his new employment will be there, and his retirement pay will be included in the loan. So we are in that situation where we might have a funding fee, we might not, we won't know until actual closing day, which is fine. We could afford the funding fee if we need to. So our situation is that we're moving to a small town in Pennsylvania. I think this is truly my realtor and the seller's realtor agent's first time dealing with a VA loan, even though they both said, oh yeah, we have time with VAs. We've done it, XYZ, in the exclusive agreement.
Jennifer, I'm going
they
to
even
pause
checked.
you
They are,
right there for 1 second because we're losing you just a little bit on your audio and video. If you want, you can just turn your camera off, and that way maybe that will support your bandwidth. And I will add there, one of the things that she told me too is that her realtor asked for 1 month to study the VA loan before they moved forward. Right, Jennifer?
Can you hear me? Is it better now?
Yes.
Yeah.
Yes, I can hear you. Yeah.
Oh, okay. We financially prepared for the chance that we might have to do a funding fee. We got ourselves a VA loan broker that's all he does is just VA loans. He doesn't do anything else. We thought we were in the right situation. And again, when we put the offer on this house last week, Thursday, a lot of things started coming to light, such as I don't think this agency ever dealt with a VA loan before. There was some fear with the VA loan, and then ended up finding on my husband's DD 214 day that we weren't accepted. Our offer was not accepted because we had a VA loan, and they accepted an offer $15,000 less than what we offered with a conventional loan. So I guess my issue is I don't know what to do. I don't know what to do next other than make noise and try to help others get past this and not have this situation happen to others. I feel like it's a huge education issue and with our realtors, and I feel like they kind of instilled fear into the seller, even with us offering 15,000 above asking price, knowing that we were getting these vibes that there was concern with the VA loan, from the time of viewing to the time we made the offer.
Yeah, I'm sure you have so much to add, but I think the first thing that I want to say is a realtor coming from, this side of the house and the real estate transaction side of the house is your biggest advocate, and a realtor who understands the VA loan process. And typically that's usually someone who's done it a lot. They are your biggest advocate in putting offers forward because a VA loan offer is stronger. And I'll pause and let Michelle speak to that.
So my heart is breaking. And this is one of the reasons that I am such an advocate, right, for the education side, because that's exactly, Jennifer, what you are really coming up against is those real estate agents not knowing the product, not knowing and being scared about it, on trying to steer you away from that. I would ask, is your loan officer being a good advocate for you and talking to and explaining and educating the agents? That would be one suggestion that I always make sure when I was originating. And I know that Austin, and when he talks to his team, is that if you've got, especially a VA loan where people are a little nervous about it because they don't understand, that we'll pick up the phone and call the agents, the listing agent especially, and talk through why, that just with the client's permission, about how well they are qualified, about what the process is if there is a question or a myth about how the appraisal process works. It is a lack of knowledge. At this point, there's been conversations at the Hill. We would love to have military and veteran. We'd love to have the type of loan that is being used removed from the actual purchase agreement. That's no one's business what type of loan you're using. We have not been successful there yet. So the next thing is getting it recognized that a service member or a veteran is a protected class, and it would be discrimination and not looking at their purchase agreement or their offer in the same light as anything else. But until that happens, there is this preconceived idea that the VA loan costs the seller more. Absolutely false. Takes longer to close. Absolutely false. That the borrower is less qualified. Absolutely false. In fact, when you look at the profile, the statistics of our military and veteran buyers, they are better than any other demographic that is out there that loan types. So they're all false and they can be overcome, but they have to be overcome with information and education. Outside of seeing if you can get out of the agreement, the buyer's agreement, because they are not doing their job appropriately, I'm not sure that what legal actions. I'd have to refer you to a real estate attorney in regards to that specifically. But if they, and I would rattle their cage. I'd say that you'll go to the local news station on how, as a military or a veteran, you're being discriminated against because they won't accept, or they're trying to steer you away from using your hard-earned benefits. That would be a possibility. But I think what you are truly backing up against, and Austin, you can chime in here as well. I think you're backing up against the fact that you're dealing with individuals that just aren't knowledgeable about the product and are going off old myths.
Mm-hmm. Michelle, I was going to add that it speaks to how important it is to align yourself with experts, and that's what Kimber's team, will assist you guys do along the way. You really need to have champions in your corner that understand the process and that are willing to fight on your behalf. And it's It's one thing to be a VA loan expert and just know the subject matter, but you also have to be prepared to do outreach and reach out to real estate agents and champion for your client and go to bat for them and let them know, my client is very highly qualified. At Newrez, we do that time and time again. We're always reaching out to buyers and sellers agents, because if we don't get contracts, we don't write loans, and that's what it's all about. So
I would thank you so much for saying that, Austin. I think he very much put into perspective what we are here to do for you, Jennifer. So if you want to schedule a strategy session with us too, we can dive
Okay.
deeper into it one-on-one. I do want to offer another perspective, and it is possible that the sellers of that house know that there's something wrong with the house.
And that's what I was actually
Will-
thinking.
Yeah,
Yeah.
it's possible that it's less about they don't want to sell to you, because if they accepted a lesser offer from a conventional loan, knowing that if they went through with you, they could make 15 grand more. That's not chump change. That's a car. So, it's possible that it couldn't pass the wood destroying organisms inspection or several other types of inspections that it might not pass as VA. And so it could be an opportunity for you to dodge a bullet.
Sure.
In which case they may have experience with this before. You have to use your own intuition and gut to kind of evaluate if that's the situation you're in or not.
So I will tell you, in the last 48 hours, I'm a noisemaker. So I have gotten representatives from my district involved. I am one step away from contacting the news, just because I do feel like they are essentially judging by the loan. And I really do like the idea of service members being a protected class, and dropping that loan type off of, pre-approval letters and in offer letters. But I have made a lot of noise, and we did get a message yesterday morning that they are now reconsidering our offer on the home. So I think my noise kind of made some sense to them, and I'm hoping maybe the sellers did some research on their own and maybe stepped away from their agent's fear of VA loans going forward. But, time will tell.
Thank you.
Good
so
luck.
much. Good luck.
And
Yeah.
definitely get in touch, right, with the strategy meeting.
JJ Dixon, is it true the VA loan requires more inspections and more detailed inspections? And is that why it, quote, takes longer? I'll let Michelle and Austin talk about the inspections. The short answer is yes, there are more and they're more rigorous, but no, it does not take longer. Michelle, Austin, do you guys want to speak to why and what is going on during that vetting process?
Austin, do you want to take that one?
I can speak to it, Michelle, and you can, since you're so great, if I drop anything, you can backstop me. But yeah, so VA requires a couple of inspections that aren't mandatory on conventional loans. It does require a termite inspection, for lack of a better word, for certain parts of the United States. If you're fairly north where termites aren't as prevalent, it's not a requirement. There's a map that shows the areas that there are. If it's not on public utilities, well and septic tests can be required as well. And those are not necessarily required on conventional loans either. I think a lot of the bigger upfront things that turn off real estate agents is like the VA appraisal process can be a little bit more in the buyer's favor. It's really looking out for you as the consumer. When the VA goes out, they look at things like peeling paint and things that maybe, potentially health issues downstream that sometimes conventional loans don't require. And other than that, it's pretty straightforward. It doesn't take longer. Most real estate agents and lenders know that these are required, and we get them ordered right off the bat in the very beginning. And we get them back in a really timely manner. It doesn't, I've never seen a VA loan not closed due to a termite or a well and septic inspection, unless the loan officer, doesn't know what they were doing and dropped the ball and just forgot to order them. But if they're ordered up front, they usually come way back early in the process, and it does not slow things down.
Yeah. And I think Austin is also spot on in talking about VA cares for the veteran, right? For their client, their customer that is using their product, the VA guarantee. They want to make sure that the home is safe, sanitary, and sound. Safe, sound, and sanitary. So the roof's not falling in, right? There's not an economic lifespan that the roof has to have. It just has to say it's going to be up there for the foreseeable future, and it's not leaking today. And there's not damage from it. There's not exposed wiring. There's not a 6-foot deck with no handrails around it that you might, plummet to your death on. Those kind of things, right? Truly safe, sound, and sanitary. And they also have a process to go through that if something really isn't a significant safe, sound, or sanitary issue, that the veteran can ask that the item be waived from things that the appraiser caught and ask for them to be waived. And I've seen the VA waive all kinds of what I would say are minor issues, but with knowledge and understanding about them, the VA has said, yeah, if you take responsibility for it, we won't require it be done. But a lot of, again, real estate agents don't understand that process.
And I'll just add to it. I don't think there's anything in the VA inspection process that you as a consumer wouldn't do in your own home inspection due diligence anyway. It's just probably mandatory as part of the loan application process through VA, but there are things you'd want to know about. You don't want to buy a house if it's termite infested. Like, you would want to know these things. You don't want to buy a house if the water fails a water test. So these are things you would want to know for your family before you did something like buy, a piece of real estate. So
Thank you both. I've got a huge chat to work through. I'm going to rapid fire questions. I do want to invite anybody who wants to talk to Michelle or me or Austin in person. All you have to do is put your hand up or come off mute so we can hear you. Otherwise, we'll just continue working through the chat here. I'm starting at the top. So C. Brown wants to know, do you have a discount to the VA funding fee if you have a VA disability rating?
Austin?
yes. Yeah, if you have a disability rating, the funding fee can be waived in its entirety.
Yep. And
Right.
if it's a disability rating greater than 0, it's not about being 100%
Yeah.
P&T. It is, you have a disability rating, which on your awards letter will say 10%, because they're always rounded up to the next 10% component on the awards letter. So if you've got a service disability connection that you have received, you are exempt from the VA funding fee. You will not pay it.
Charles
I could
wants-
say, sorry, go ahead. So I would say if I had a disability rating, I would 100% use a VA loan every single time. It'd be the best loan for you. The interest rates are better than conventional loans. Even if you put money down, that's your choice, obviously. But no funding fee. It's a hands down no brainer. So
If you are awarded VA disability after the fact, can that be refunded?
So that is a great question. And a couple of things, one I had seen in the chat as well on the funding fee. So it all has to do with, and we're going to talk about if you are a veteran, so you have exited the military. Okay, so you're out of the military and your pending claim finally gets adjudicated and you receive an award, a service connected disability award percentage. If you filed that claim prior to closing on the purchase of your home, right? You file the claim, you close, it gets adjudicated and awarded, it goes back into effect prior to when you closed. You can ask VA for a refund of your funding fee. If, however, you close, then file your claim, and it gets adjudicated and then backdated, of course, to when you filed it, and it was after you closed, then no, you can't ask for a refund on that most recent closing. But going forward, any property that you did a VA loan on, you would not have a funding fee on.
Wow. I had no idea you could do that. I love talking to y'all. I'm serious. So thank you so much, Bridget, for that question.
All right. So, so I'm a veteran. I'm 80%, and I don't have the best credit. And so I'm just trying to figure out how do I go about getting a VA loan, because I tried in the past, but I had been told that because I owe child support, I can't get VA loans. So I'm just really trying to weave through the I guess you could say the misinformation to try to figure out how I could be able to kind of, get to home ownership.
Love that, right? And so what I would tell you, one, is definitely set up for a strategy meeting, because each person's situation is very unique. And what we love about VA is VA has written their guidelines very, very vague in most of the handbook, in VA's handbook. And that's because VA wants the underwriter to look at the merits of that loan based on the specific situation and all of the information and documentation pertaining to that transaction. So there's not all these hard black and whites, hard yes and no's. This is generally what we're looking for, but if you can make logical decisions and if it makes sense, then we'd let you consider this. And so there's a lot of ability to use logic when it comes to the VA loan. And I would know, like, Austin would want to see like your whole situation and be able to then navigate, is it, yes, we could start something now? Is it, hey, there's some things here that if we work on a little bit, that we would put you in a better position that you could do exactly what you wanted, and here's some resources that we have that can help, those different kind of things. But I love, right, home ownership, that is a game changer when it comes to building wealth. And I love that VA loan, Dario, and would love to make sure that we're connecting to see how that's possible.
Dario, I know you already completed a form. Have you got a text from us yet?
I have not received one yet. No, I have not.
Katie's going to send you one right now. Okay.
Okay.
All right.
All right.
All right. Let's get you set up and figure that out. All right. Popping into the next question in the chat. April Tottle wants to know, she's not the only person. We had a couple of people ask, can you speak to an expert explanation of the VA construction loan?
Austin, do you guys do much new construction on your side of the house?
Not in DTC, but we could get them paired with construction experts on the retail side. So we as a company, yes. My group, not so much, but I do have contacts that are super knowledgeable in that space. So
wonderful. And so when we talk about new construction, so there are 3 different scenarios that come into play when you talk about building a home. And VA is possible in all 3. And one is, right, a turnkey situation where you found the builder, it's his, he's building the house on a lot, and all you're doing is coming in at the end and paying, buying the house, the completed house. That no problem all day long, right? That's pretty much just a regular VA loan with a couple of different things that are in there when it comes to the property itself. The other is what's called a 2-time close. And this is where you, usually with the help of your lender, because they don't do 1-time closes, which I'll explain in a minute, but it's a 2-time close. So you work with your primary lender who's going to do a VA loan at the end of the construction, but they're going to help you find a company that's going to do the construction loan. And a lot of times these are your local farm bureaus or credit unions, small regional banks that really like construction, and they are really good at it, and they don't care about long-term mortgages. So they are going to work with you using your lenders approval to, in essence, do the construction loan. And then they're going to do all the payouts of the construction loan. And then when that property is done, your long-term mortgage company with your VA loan is going to come in and pay off that construction loan. Okay. And it's called a 2-time close because you close on the construction loan and then you close on the long-term takeout, in this case, talking about the VA loan. VA does that all the time. The third one, and this is the one that can be a little tricky, and tricky because you have to find a lender that does them. And that is, VA has a 1-time close new construction that you actually close on the house, the land in the house, before the building starts, right? And that's your long-term loan before the building starts. And it's all based on the value of that future value on that home when it's finished. When the appraiser does the appraisal, they're doing it on plans and specs. And they are then at that point saying, this is what the home's going to be worth when it's finished. And you close on that loan up front, and that VA loan is actually paying out the construction draws during that time frame. Because lenders, mortgage companies, we aren't builders. We don't do a lot of construction. And you're talking about taking a relationship that is usually in a transaction anywhere from 30 to 60 days and saying this could take upwards of a year. And there's a lot that can go sideways in a year. And so a lot of mortgage companies really shy away from that 1-time close construction situation because we are not the construction experts. There are some that do the VA new construction. They do it well. I know here at Newrez, we have started dipping our toe in it. I think we have like 9 states that we will do a one-time close VA construction loan on. But outside of that, it's like, nope, two-time close or the turnkey transaction all day long.
Thank you so much, April. And the other people who asked that question, do we have follow-up questions on this topic before we move to the next question in the queue?
A lot of follow-up questions, but I'll save that for my strategy call. Because I've already found it very difficult to find any lenders who do a VA construction loan. A lot of them have proposed the 2-time close, which actually sounds better financially than the 1-time close, because you still have to live somewhere while your house is being built. And with the 2-time close, at least with our lender here, they said that it's like an interest-only loan, which is a lot less, and you're only paying on the draws.
Well, and I would need to double check, because I have never, this is a product that came out after I was originating, so it's not like one that I have truly dabbled in personally, but I think that there is something like a 6-month time frame you don't make payments on that VA news group, but I'd want to double check that for you. Like I know where I can go find the guidelines, but again, it is finding then that company that will take that long-term risk on a one-time close.
We paid the interest on the draw amount when we did ours.
Okay. Oh, wonderful. Yay. Thank you. Thank you, David.
Thank you.
Thank you, guys.
All right. Fuko wants to know, if we are currently overseas, can we go ahead and use the VA loan again if we used it one time? And I'm assuming that's regarding buying a property in the United States again.
Austin, do you want to run with that?
The answer is yes. You can use the VA loan multiple times. You can initiate the VA loan while overseas. Everything comes down to occupancy and occupancy timeframes. So it would depend on where you're buying the house, stateside, and when you would be back stateside to occupy the property.
And we just did this, the military MLS, our most recent closing, we were helping a family a dual active duty military family who was Oconus, and we actually closed them through Newrez. So they were Oconus, still not back in the States. Actually, they don't come back until June or July, but they have closed on a home and they have a location to move into. And that was really a great honor for us to be able to support that family in partnership with Newrez, to be able to support that family together through that really challenging time while one is deployed and one is stationed overseas. It was quite an honor to support them. So Fuko, the answer is yes. All right. Charles would like to know in what scenarios and when is a down payment needed, because he says, I bought my second home in Nevada using the VA loan, and I did need to pay a down payment.
So it comes down to entitlement. And the formula is dependent upon a couple factors. One is what remaining entitlement that you have, and then the purchase price of the properties that you're buying. So there is a VA calculation. It's not a one size fits all. This requires a down payment, that one doesn't. As the loan limits have increased over time, it's been easier to purchase multiple properties with 100% financing. It just depends on what you're buying and how much entitlement you have left. If you have a strategy session, and we can do those calculations for you, though. So.
Yeah. I would say there has been nothing more beneficial for me than going through the strategy session and knowing exactly what the numbers are. Sorry, go ahead, Michelle.
Yeah, no, I was going to say what I would add on to that when it comes to the entitlement, because there's this formula. And when I teach loan officers about entitlement and how to do the calculations, it's a good 40-minute conversation with calculators and pen and paper. So if you don't have enough entitlement left for 100% financing, let's say you were buying a $400,000 house, and VA is only going to back the first $350,000, right? Because that's how much entitlement I had left was enough for VA to back $350,000, but I want to buy a $400,000 house. VA is like, hey, as long as you can afford it and get qualified, we're okay with that. But you have to then pay your down payment on the difference. So VA in that case is covering $350,000. It's a $400,000 purchase. So you are responsible for $50,000, and your down payment would equal their their entitlement percentage. So your down payment would be 25% of that difference, that $50,000. So, and this is what, through that strategy session, taking a look at what you have left, what you want to do, where you're buying, all of that stuff is then where we could be able to confidently say, if you bought a home at this price range, VA would back it, right? You wouldn't need a down payment. If you were looking at this point, then you would have to make a down payment. And that down payment is 25% between the purchase and what VA will cover.
Thank you for the really thorough explanation. I would still encourage you, though, to hop on with Michelle, because even in doing the math yourself, like I said, we had someone last week. We were working on doing the math, but we contacted Michelle just to make sure we had gotten it all right. And we had done something wrong. And there was like $100,000 difference between what she advised us and what we had calculated independently. So I definitely encourage you to do the strategy session. All right, Farida wants to know if it makes sense to use the VA loan in New York City, like that close to the city, or not. What are your thoughts on that?
I can take that one. There's no geographical restrictions whatsoever to using a VA loan.
Why wouldn't you?
Yeah, go get
Yeah.
it.
Go get it, Farida.
Yeah.
Hey,
All
it
right.
might take the cake. It might end up being the most expensive home ever done with zero down with VA.
Yeah, truth. Oh, and I see some people in the chat wanting to book a strategy session. We'll drop the link for you now one more time as well. Esteban says, can you talk about the VA loan and how it covers people who are in the reserves, not active duty?
Absolutely. So for our National Guard and reservists, right, when VA was first started, y'all weren't even allowed to use the VA for decades after it was created. So today, for a National Guard or reservist to be eligible, there's a couple of different ways that this can happen. One, if maybe you were active duty and you transitioned into the reserves and you've met the requirement to have your VA home loan benefits, you would retain that in the reserves. If you've entered the National Guard or the reserves and you get called up for actual active service, not for training, but for service under Title 10, or for our guards, even under Title 32 for at least 90 days, then you become eligible for the VA home loan benefit. But if you don't get called up for active service for 90 days, then once you have served 6 creditable years, and creditable years for the home loan benefit means you've earned 16 points for 6 years, you qualify. So, and again, that means you are a reservist or a guardist and you have done at least one drill, you earn 16 points. You therefore, if you do that for 6 years, you become eligible for the VA home loan benefit as a reservist or guardist.
Wow, you are like the VA loan book. You're like the ChatGPT of VA loans. Just type your question into Michelle and she's gonna give you everything. Thank you. Okay, so you need 90 days of active duty service or 6 years of reserve service, guard service.
Yep, full years. Yep, they have to have
Full years.
actually done some drills every year.
Barina would like for you to discuss all of the benefits for those who are 100% P&T disabled vets.
So with the VA loan, the only benefit is you don't have your VA funding fee. It's waived. Every state has different benefits that they offer the military. And you can go out to military.com and search for your state, and it lists all the state as well, state benefits that you would have in that particular state. There are states that if you're 100% P&T, your real estate taxes are waived, exempt. There's some other states that that they don't care. There is no waiver. So it depends on the state that you are living in or that you are buying in, what that state allows for in those benefits. Austin, anything that you would add to that?
And that's pretty much a nail on the head, Michelle.
Thank you. Okay. Well, I've heard that if you have, when buying with a VA assumable loan, It has now been approved for buyers to finance the gap amount with another loan. Is that true? This is from Michelle Z.
Yes, right. When you do an assumption, you are buying the house for what they are selling it for, taking over their existing mortgage at whatever they owe, and you have to come in with that difference at closing. And historically, because of some of the rules that VA had in place, that meant you had to have just cash. So if that difference was $50,000, you had to have $50,000 in cash. If it was $200,000, you had to have $200,000 in cash. With the recent increase in the last few years in interest rates, VA put out an update to the requirements, the allowances of secondary financing to be used, that gap financing, and they are fine with it. You just then find that lender that will do that second. In essence, it's a second mortgage behind an already existing first. It has to meet a few requirements. And Kimber, what I can do is make sure that I send that information to you. And or if you want, send that to Austin or myself, we can make sure that we provide that.
Awesome. Okay. So can you use the VA loan for investment properties? This one's coming from an iPhone user on the call.
Austin, you want to take that?
I can take that. So you cannot use a VA loan to purchase a non-owner occupied property. Does not mean you cannot own a property and occupy it and then move out and convert it to an investment property. But if the sole goal is to be an investment property day one, you cannot use a VA loan.
All right. So it's all about that intent, right?
That's correct.
Okay. Thank you. I hope that clears it up for everyone. Michelle spoke about this earlier. Intent to occupy first is important, but that does not mean that it can't ultimately become an investment property.
Yeah, I want to just add to that piece. I think that's a big misconception that people can't use it over and over again and build a portfolio after the fact. You know, like they don't have to sell the house that they're leaving just to get another VA loan. They can maintain that home, create wealth by adding investment properties and continue to use the benefit over and over again. So
amazing. Yeah. Okay. And Tammy would like to review the requirements for buying as a veteran. So she says, we purchased our first home with a VA loan in the Panhandle, while active duty. It's not our forever home. We plan to keep it as a rental and want to take a second VA loan for our forever home when we get out next year. But we've heard it has to be used in conjunction with PCS orders.
Retirement is different than PCSing, right? So if it makes sense that this is going to be where you go upon retirement, your family's there, you have a job offer there, you're from there, as long as it makes logical sense that you would be going there after retirement, that can be, right, within that 12-month time frame, that could be considered a primary residence. You know, if it's outside of a year before you would actually occupy, that would be a problem. But inside a year, that could be considered a primary residence. Just remember, income qualification also comes into play in that situation, though. You're not going to be able to use the active duty income for qualifying.
And just a quick question to add on to that. So when you say retirement, my husband's going to be getting out with like 15 or 16 years. That's still fine, right? It doesn't have to be like quote unquote retired, just leaving.
Right, but he won't have the retirement income to use, nor is active duty. It would be all based on future employment, and that would need to be within 90 days of closing.
Like his offer letter or something with his next employer. Gotcha.
Yep.
Okay.
And regular income, right? If it's a 1099 self-employment situation, that's a whole different thing. Things that in a strategy session, we can make sure that we have got you on the right road.
Okay. And with that, because we were briefly talking before about the funding fees, it would make more sense for us then, depending on how much our funding fee would be, to wait till he officially got out and had his disability rating to purchase our next home, because that funding fee would be reimbursable.
So it could, yes. And you get into, and I know that we've got a lot of questions to get to. So Tammy, in that strategy meeting, we'll talk about what the timing looks like if you're still active duty and have a pending claim. because there are some things there to be aware of, that if that claim happens to be adjudicated before you close, even though, right, is the memo rating at that point, because you're still in, you're not out yet, but it's been adjudicated, your funding fee may be waived. If it isn't adjudicated, but it is pending, then we have to really talk about timing, because there's some things that you're going to want to be aware of.
Great, thanks.
All right, Penny would like to know, and I think a lot of people want to know this. We've kind of danced around it a little bit, but we've not put any clear numbers on it. How long, if you use the VA loan, do you have to keep the house, and can you refi out of it? And I know there are a lot of implications like capital gains tax, et cetera. So I'll let Austin and Michelle take this one.
Austin, do you want to jump in on that one?
Yeah, just to clarify, so how long they have to keep the VA loan once they purchase a home with it?
Yes. And can they refi out of the VA loan, which is something I've thought about. You know, if I've maxed my entitlement, can I refi out of the VA loan? You know,
And
you guys
free up your entitlement.
Yeah.
Let me
Yes,
clarify
so-
here too that Newrez does not just do VA loans. They do every single loan type. So if you're talking about like long-term lending strategy, wanting to be able to use the VA loan to buy your properties, but then refi out to recapture your entitlement, that's a valid strategy.
Correct. And there is no minimum time frame you have to be in a VA loan before you could refi out of it, to answer that portion of the question. Obviously, it would come into play what type of loan you were going to use to refi out and what the requirements for that loan product were. Equity stance, if you bought it with 100% financing, would probably come into play, would be right off the bat what I would think of. But no, you could definitely refi out of the loan to free up the entitlement. Was there a second part to that question too?
I'll repeat the full question. 'Cause we kind of said a lot of things there. How long do you have to stay in the home as, you know, like your primary occupancy if you used a VA loan? And how soon can you refi out of it?
So I mean that's a more tricky one. So I mean it is designed for owner occupancy, and the general guideline would be, I think, 12 months. Correct me if I'm wrong, Michelle. I think that's right.
Ideally, yes. And I will say that again, it comes down to what seems logical. If we're talking to somebody that has multiple investment properties and they are moving out of the VA, the property that they just bought, and want to buy another one, and they want to refinance it out, and it's in the same area, you know, all of a sudden it's like, oh, this isn't feeling good. You've got 3 investment properties already. You're buying in the same neighborhood or in the same area. You're keeping the home. It feels like you're churning and burning, and that you really aren't buying your primary residence, right? The idea being that you are going to live here. This is your home. So it depends. That favorite answer that we always love to give is it's going to depend on the situation and what makes logical sense.
Yeah. Strategy session would be good for this, Penny. I really advise that. Leah asks, this is probably a silly question, but does disability and pension count as income?
No silly questions. And absolutely, you can use disability and pension for income qualification, 100%.
Thank you. No silly questions, Leah. The answer is yes, it counts. Tammy back in the chat. She's hot in the chat. We are looking at a refi on our VA loan when the rates go down. Tammy, what's your rate? Throw your rate in the chat if you are open to sharing. Our broker told us at closing. Oh, did you come off mute, Tammy? Was that you?
Yeah, I was just gonna say, I think our rate was like 5.75, and we were looking to maybe refi if they get back down to 5. I was trying to do the math, and like it could save us a couple $100 a month, you know, and then we could hire somebody to rent our property for us, you know, to be a manager with that money.
I love that. I love that. Yes, a good steward. All right. So our broker told us, well, you just want to ask your question, Tammy? I don't have to read this for you.
Yeah. So basically now I've kind of gotten the answer from this, but we had a broker that told us when we were buying this first home, like, don't worry about the funding fee, because if you get out with any level of disability, even 10%, you're going to get that reimbursed. And so that's just an education for everyone. She was obviously wrong. And, you know, we're still active duty. Our house is closed, so we're not going to get that funding fee back. And I'm glad now that I learned this, because we were looking about doing a refi pretty soon if the rates keep dropping down. But under the impression that like, well, why not? We'll be getting it back later anyway. So now we know to wait till after, or depending on our strategy call to wait, but we'll see.
Exactly.
Awesome. Well, thank you for Tammy for reiterating what you learned for everybody here. All right, Kelsey says, my husband and I were both active duty, and would be using our VA home loan for the first time. Are there any benefits of having two people with eligibility or entitlement?
Read that one more time.
My husband and I were both active duty and would be using our VA home loan for the first time. Are there any benefits of having two eligibilities going into this purchase?
So in that case, choose which one you want to use, right? So you keep one of your guys' entitlement banks full and the other one has partial. So then depending on what you do next, you've got lots of options. There wouldn't be, from a consultative standpoint, there wouldn't be a reason we would ever recommend, and actually I would try to talk you out of it, having two individuals, a married couple, both veterans or service members, both with entitlement, both wanting to use entitlement, because you have just created a situation that there is no full entitlement left in the household if you're both using it. You can both be on the loan, but only one of you needs to use entitlement.
You're actually in a really, really strong position with both having the entitlement, Kelsey. Kelsey, do you have a strategy session booked? I hope that you do. All right. I'm going to move on to the next question. David asks or says, you can also negotiate with the seller to pay all of the closing costs, right? It's really kind of a question there. Like if the house is selling for $350,000 but appraises at $375,000, you can have them sell you the house for $360,000 with the agreement that the seller provides you a $10,000 check that you can use for your portion of the closing costs. Is that true? Is that a true statement?
I can take this one. That's a yes. The seller can do seller concessions to offset your closing cost. I do believe the VA maximum is 4% of the purchase price. It's not 4% of the loan amount. If you did 100% financing, it would be obviously. But so yes, there is a cap, but 4% usually covers most things. So
awesome.
And the only thing I would add to that is understanding, right? And we are now, a couple of years ago, we were not in a situation where you could expect that the seller was willing to pay any closing costs, right? We're now in a situation that we're seeing that more and more. And a lot of the real estate agents don't understand that there is a difference between standard non-reoccurring closing costs and concessions. So a seller can be told that you can only pay 4% in concessions, which is true, but they think that every cost is a concession, and that is not true. A seller can actually pay all standard non-reoccurring closing costs, which is pretty much everything, including up to 2 discount points, plus 4% in concessions that can be used to pay the VA funding fee, the non-standard reoccurring fees or costs, those kind of things. So the seller, if they're willing, can sometimes, depending on the situation, pay upwards of 8-9% of the actual value of that home, than just this idea that they're capped at 4%. They are for some of the fees, absolutely, but few of the fees that you pay at closing are considered non-standard reoccurring. Most of them fall in that standard non-reoccurring bucket.
That is really strong information. And in this, I guess, 2024 and 2025, we're seeing a lot of sellers paying significant concessions. So if you are in the process of buying a home or you are preparing to buy a home, we definitely want to speak with you on a strategy session to talk about expecting to ask for concessions if your market conditions meet it, and connecting you with a military connected realtor in your area who can advise on what type of concessions you might be eligible for right now. taking that information and knowing what Michelle just said of all of the areas where you can ask for concessions, it makes you a very powerful buyer, a very educated buyer. So if you want to be that educated buyer, we'd love to help you. We'd love to connect with you. Can VA loans be used internationally in other countries? Asks Renata.
No, VA will allow Guam and Puerto Rico, I think, but you have to find a lender then that actually is licensed to do loans there. And there's probably one or two. You might be able to Google that, or I can help you find somebody. But outside of territories, U.S. territories, no.
Yeah, thank you. All right. Stacy asks, how do we tell how much entitlement we have left? And I really love to recommend that you schedule a call with Michelle. But Michelle, Austin, do you have feedback here?
Yeah, off the cuff, it's on your COE, your certificate of eligibility. It will show what entitlement's been used and what you have remaining. So.
And I know you can order your COE, your certificate of eligibility yourself. I think it's on the eBenefits website. But you can also, through a strategy meeting, reach out, and Austin has a phenomenal team that can pull your certificate of eligibility for you and then be able to have those numbers and have that conversation.
Yeah, and we can also gladly do that and do the calculations if you have a current home and looking to do a second VA loan as well. So
I like things done for me, and I advise that you let them do it because you're kind of powerless. The eligibility remaining doesn't give you a lot of information without having them perform the calculation on the back end, because it doesn't tell you still how much you can buy without a down payment unless you have them run the numbers. So I would definitely just let them do it. Let's see here. I was told my entitlement was $1 million and I just bought a house for $565,000. Then the difference would be my leftover to buy another house, right? And this is from Joey Villanueva.
So the way that works, right, is I'm guessing when you say $1 million. So depending on where you live, or where the property is that you are looking at buying, and what that max loan limit is, and let's say it is $1 million, then what you actually have in entitlement is $250,000, because entitlement equates to 25% of your underlying loan. So if you have $250,000 of entitlement, it's $1 million home, right? So then depending on what you've used, right? So how much of that 250 have you used? And then that will help us figure out how much you have remaining left. So there is a calculation there. You're trying to back into it one way. We would want just a little bit more information to be able to feel confident in answering your specific scenario.
Yeah, that's probably a good strategy session question. The VA loan limit is determined by the county of the property you're purchasing, not your personal entitlement. So keep that in mind too.
Yeah. Earl asks, how does the VA loan work with purchasing land? I love that you asked this question, Earl, because I want some land right now. So I need to know more.
And answer that one too.
Go right ahead, Austin.
Can't use the VA loan to purchase raw land unless your determination is to do a construction loan, in which case you could do the VA construction loan because it's for owner occupancy. So they want it to be a land home combination that you're going to own or occupy.
Okay. Thank you. Does that clear it up for you, Earl? If you're still on, you can throw that in the chat or pop off mute.
I did see in there a couple of times questions about multi-units. I just want to hit really quick. VA will allow for 1 to 4 unit residential properties. So you could buy a fourplex. Anything over that's considered commercial. VA does not do commercial loans. VA might do it. VA might go to 5, but they're not going over that, right? But so 4 makes it residential, keeps everybody in line. If I'm buying a fourplex, VA says that's fine. I have to live in 1 unit and I can rent out the other 3. And if I needed to use that rental income for qualifying on those other 3 units, there's some specifics that you need to be aware of and qualify for. But it is possible to use then the rental income on those auxiliary units for qualifying, but you have to own or occupy 1 of the multi-unit complex.
So you can use the income from the other 3 units to qualify for a multi-unit property.
Yes.
That's interesting. Yes. Yeah, that's so interesting, because how does that compare to when you're applying for a VA loan and you're renting out your old property, but you can't count that income yet for fill in the blank reason?
So if you are departing a residence, keeping it as an investment property, VA will allow you to use the rent that you're going to make on that departing residence to up to the point that it offsets the monthly payment on that property. So you can't use anything above that, but you can zero out the debt on that property if you're renting it for that much. But you can use rental income on your departing residence to offset the debt. If it is I'm buying a multi-unit, I can use rental income on the other units besides the one I'm renting, that I'm living in. That's a different calculation and different requirement. And then if it's an existing investment property, I have to be able to show it on my tax returns for the last 2 years before I can use it. So that's, it depends on the situation. There's 3 different situations when it comes to rental income.
That's awesome. Okay, Nika has her hand up. Nika.
Yes, hi. Can you hear me?
Yeah, absolutely.
Yeah, I had a quick question. Thanks for this, by the way. Because I'm going into a new job sector, I was a nurse before. I went through a coding boot camp last year, and I had been told, and I just want to make sure this is true, that if I get an offer letter, since this is a new sector and I've had education, that I don't have to wait the 2 years for the income stability. I'm just trying to find out if that's true or not.
Yeah, so I always hesitate to say black and white yes or no. Chances are absolutely that you would be able to utilize that income well before 2 years. You've got the education back down there. It might be one that they might want to see that you've got 3 months under your belt, and that you still are liking the job and that you've kept it. So there'll be some questions and some discussion that would happen around that, but for sure it wouldn't be a 2-year wait.
Okay, thank you so much. Yeah, I just
Absolutely.
finished an internship and I have an offer letter from the same company. So.
Oh my gosh. Okay, yeah, it's getting prettier and prettier.
Okay, thank you.
Nika, I hope that we have the opportunity to set you up for a discussion with them if you want more details. Our next question is, Boriana asks, is it true that the VA loan interest rates still maintain a slightly higher percentage than conventional loans?
That is false. VA loan interest rates are less than conventional loans. For an apples to apples comparison for the same borrower versus a conventional loan versus a VA loan, they're going to get a better rate on the VA loan.
That's awesome. Thank you for sharing that. Boriana, I'm not sure where you got the rate comparison that you saw maybe recently, but you know, what's available on Google and what's available on the internet is always variable. And so if you are getting serious about shopping interest rates, speaking with an organization like Newrez, who does every single loan type, when you call in and start your pre-qualification process, they can tell you what your interest rate would be for every loan type. Paul says, I want to purchase a home that is VA-backed mortgage loan, I want to purchase a home that is VA-backed mortgage loan, which started process of foreclosure. Will I be allowed to purchase? So I think the home is in foreclosure and he wants to purchase it.
Yeah, so VA won't have an issue with that. The biggest concern is going to be what is the property like, right? What is the status of that property? A lot of times when you're talking foreclosure, they can have a lot of issues, right? So is the home going to meet general safety, soundness, and sanitation? If so, great, no problem. If it isn't, is a VA renovation one something that you're willing to consider where you can then purchase and renovate all at once? So yes, buying a foreclosure isn't an issue, only if you're time constrained, because foreclosures can take a little bit longer. And
Okay.
what is the status? What kind of situation is the home itself in?
Okay, awesome. Thank you for that. JJ Dixon said that in addition to the questions you should use to interview your agent and lender, could we also get kind of an outline of some of the language that we need to know, like Tidewater? And JJ, the answer is yes. We will happily put that together for you. Just send us an email if you would like to have that. I'm so sorry I keep waving my hand, you guys. Some fruit flies got in here and I'm about to have them all gone, but there's just still one hanging out. Came in on some navel oranges. All right. Charles says, what if any out-of-pocket expenses are typical for the VA loan?
I can take that one. Usually most lenders would require at minimum, the appraisal to be paid for out of pocket upfront. Beyond that, it would depend on how your purchase transaction is structured, whether you had seller concessions or not, and then the remaining of your closing costs would be paid at time of consumption at closing. So
And Austin, you'll know better because you're more hands-on right now with the actual loans. I used to use, like, if you planned on closing costs running about 3% of your purchase price, you're somewhere in the ballpark, probably a tish over what those costs will be. And so if you plan for that, then you're pretty good. Is that still a decent estimate?
yeah, that sounds about fair. About fair.
And I think that goes to, just quickly, there is when you talk about no down payment, no money down, is some people believe that means that you don't have to come to closing with any money. And it means you don't have to make a down payment on the purchase of the home, any equity that you're having to put into it. And you can roll in the VA funding fee, but those other hard costs and fees that are associated do have to be paid at closing, whether it's yourself or through negotiations with the seller.
Awesome. Thank you. Joy would like for you to explain assumable loans, maybe in a nutshell. I know we've talked about it just a little bit, so I'll let you take it.
I can give a quick Reader's Digest version. So VA loans are assumable. One of the misconceptions is they have to be assumed by another veteran. They do not. However, if you have a VA loan and you're going to allow a non-veteran to assume it, your entitlement will stay with that property until that loan is paid off or sold. And if they default on the loan after they assumed it, it could jeopardize your entitlement going forward. But so basically, when you're assuming, you're taking over the balance of the VA loan that the original party had at their terms, their interest rate. We do a lot of those now because obviously rates were fairly low in the past. Believe it or not, the assuming party does not have to own or occupy the VA loan.
And let me tell you, if you're looking for an assumable loan, the militarymls.us is where they're advertised. Okay, we're working on peeling through the country to find every military member who's selling with a VA assumable loan. So, not that we're saying that's definitely the best way or the best strategy, but if that is your strategy, shop the assumable loans on our website. And we can get you more information too on the details of it. Okay, Charles says that he is interested in purchasing a multifamily home with several units. Charles, I would love to help you find that home. So I hope that we have an opportunity to talk with you on a strategy session. He says, I've heard that when doing this, you have to set aside a few months of funding per unit, like rent per unit. Is that true?
When we talk about the rental income from the subject property that you're buying, right, that multi-unit, VA requires that you have 6 months principal and interest, taxes and insurance on the entire payment for that property. So whatever your house payment is, you need 6 times that in reserve, still in, whether it's a money market, in an investment, in a savings account, in your TSP, something that you can actually get your hands on that we would call liquid assets, right? In case you have a vacancy or something like that. So you would want 6 months of the entire principal and interest, taxes and insurance, the PITI on that property, your house payment, in reserve. That's going to be the requirement on a multi-unit.
So if your monthly rent or your monthly expenses are $10,000, then you would need $60,000.
Yep. If your house payment is $1,000, you need $6,000 in
the
bank. Yep.
Perfect. Thank you. Charles, I'm excited for you. Hope that we can help support your process. So Boreana says 2 benefits of the VA loan that we haven't discussed yet is transferability and reduced funding fee if you put money down. Could you touch on those 2 things?
I can take that. So transferability, I'm assuming she means it's assumable. We did kind of touch on that briefly a minute ago. They are assumable. Does not have to be assumed by another veteran. The funding fees do reduce as you put money down. First time home buyer with less than 5%, it's 2.5%. If you put down 5%, it's 1.5%. And then if you put down greater than 10%, it's 1.25%. That's for first time use. When you do subsequent use, it goes to 3.3%. If you put down less than 5%, over 5% will be 1.5%, and then 1.25% again. So
That's awesome. Thank you for sharing that. Do you work with veterans who are rebuilding their credit? If so, how long does this take? This is from Chiquita. And I want to say, Chiquita, before Newrez answers this, the Military MLS Concierge team has strategies to help rebuild your credit. It's more of like instructions from like A to Z of ways that you can help get things off your credit report and restructure. So if you need help with that, we can send you our guide. And then I'll let Michelle and Austin speak to how they support you as a lender.
yeah, I think there's no cut or dry black and white template for a loan applicant, and we don't discourage anyone from ever applying at any time, depending whether they feel their current situation is. And once we get, an application in and see, all the pieces of the puzzle, then we can definitely advise them on paths forward to home ownership. And whether that's a 1 month or 6 month or 8 month, journey, we would be with them every step of the way. So
That's amazing. Yeah. So does it hurt your credit to apply for a loan or start the pre-qualification process?
So we do at Newrez, we do hard inquiries when we take full applications. One inquiry is not really going to have a overall drastic adverse impact on your overall credit score. I wouldn't recommend going out and having your credit pulled over and over and over again, but to have it pulled once and have someone look at it and see where you stand, probably not so much. So.
And while you don't get the score, I want to make sure everybody knows that by law, you are allowed to get a full copy of your credit report, the whole report from Equifax, Experian, and TransUnion every year. You go to annualcreditreport.com and you can request. And what I tell people is plan on doing it like every 3 months or every 4 months. Pull one of your reports. And so that you're always taking a look to see if there's anything new or different that is out there. So 1 month, pull from Equifax. Then 4 months later, pull from TransUnion. Then 4 months later, pull from the other one that I can't think, Experian. And then in another 4 months, you're back at a year, go back and pull your Equifax again, so that you're always taking a look to see, is the information that's being reported on me correct? Is there anything that looks iffy that I should get in front of that I may not know about?
And when David asks, does a divorce count as a life event? And if there is later reconciliation, does that count as a life event as well? And I think that's he says in his question, spaced out over the course of 12 months, and life event meaning leaving the property, purchasing a new property, coming back to the original property. Does that make sense?
Yeah. Go ahead, Austin.
Yeah, I was going to say, we would count divorce definitely as a life event. So.
Okay, and reconciliation as well.
Sure. Yeah. I mean, everything, there is not like a hard and fast rule. It's all about common sense. And when it comes to occupancy, if you can make a case and it can be documented, then sure. Yeah.
So what if our only income is VA disability income? So there's no retirement, it's just disability. Would that income still help them qualify for a loan?
Yes, absolutely.
All right. What is the difference in approval odds between a 580 and a 620 credit score?
That's a hard one. There's no cut and dry. VA doesn't have a minimum credit score requirement. Some lenders actually do with overlays, but the VA does not. So it's an algorithm that looks at your overall credit profile and picture, and score is just one part of that. So, I mean, when you look at, lower score and you're not putting any money down, it might be slightly more problematic. It looks at assets. It looks at what the total debt ratio is, how much income you have versus your debt load. So it's hard to say. But
okay.
I wouldn't ever let your perception of what your credit worthiness is prevent you from actually talking to someone who could look at it with you and give you some guidance. So
true. Yeah, so true. Chiquita, let's get you on a strategy call if you want to talk about your specific scenario. Yvette, what are the VA benefits if once you are a disabled veteran, do they change?
As far as VA loans are concerned, the benefit is the removal of the funding fee.
The funding fee, right? Yeah. And then Melanie asks, what is the difference between VA loan or CalVet loan or any state VA?
I'm going to defer that one to Michelle.
I've not heard of the CalVet loan, so yeah. News for me.
Yeah, I'm going to look that one up.
Yeah, so there are states, that one's in California. There are states that have their kind of like their own like housing bureau, housing association that offer like in Alaska, there was Alaska Housing. There's the Virginia Development, something or another. So we'll have different programs. I think there's one in Florida, and usually sometimes they have some overlays over and above what regular VA would allow. Sometimes it's exactly what a VA loan would look like or a conventional loan would look like. And then it's finding the lender that has been approved by that agency to offer that loan. I think with CalVet, along with a lot of the state programs, there is some behind the scenes that if you sell it before this time, you owe this back from net proceeds. I mean, there's some little things there that the state's going to protect themselves as well. But the specifics, we would get somebody from California on the phone to be able to answer those kind of the differences between what a regular VA would look like and what California's CalVet loan looks like.
I think base answer is obviously VAs done by the Veterans Administration on the national level, and things like CalVet are done by like the California State Veterans Affairs Department. So it's exclusive to California residents and a little bit different. I know it involves land contracts. I could get more information on it. We'd gladly do that in a strategy session. So
that's awesome. Elena asks, is it true that you have to sign a contract with a realtor to see properties now? And yes, Elena, that is true. That's a part of the NARV settlement that indicated all buyers must have buyer's representation, even to walk into a property. What I'm seeing a lot of is we'll give you representation for 1 full day or 30 full days, just so you can tour houses. But I don't particularly like that. I don't think that it provides you the best service because you kind of get matched with door knocking. I don't mean that as a negative term, but realtors who are just focused on trying to get you in as many houses as possible and hope that something sticks. So Elena, totally recommend that you take advantage of your resource at the military MLS. Use our concierge team to match you with a military connected realtor in your town, someone who can support you long-term and would be happy to also open doors for you. Elena also asks, what percentage of VA appraisers what is the percentage of VA appraisers who have put houses in Tidewater? It happened to us.
I don't have any direct statistics on the percentage of. I mean, we do a ton of VA loans here. I mean, I would honestly say Tidewater as of late is probably the exception, not the rule. I mean, it does happen, but I don't think honestly VA Tidewater happens any more than conventional loans coming in under the purchase price to it. It's probably just, what's going on with that particular property and what that seller thinks it's worth. So,
and the only thing that I would add on to that is when you are in a market that prices overall are increasing, you never have to. It is unusual for a property to potentially come in under value when values are increasing. But when you're hitting the market that we're hitting now, which is a little stagnant in some areas is decreasing, it is quite feasible that the purchase price that they're looking at may be a little on the high side given the current environment. And all Tidewater is the requirement that before the appraiser finishes the appraisal, they have to do a call out to the agent that is the contact and indicate, hey, how did you come up with the value that you're using? Indicating I might be running into an issue and being able to come in at the purchase price. So what did you use? What comps did you use? What were you thinking when you came up with this value, so that they can consider that before they actually finish the appraisal and it comes in undervalued.
Yeah,
So
that's a
there are
really good.
times,
Yeah, that's a really good point, Michelle. And I should have added that too. It's probably another really feather in the cap of the VA loan that you actually get the opportunity to provide other data to the appraiser to support the property value. If you think it's, should be sold at X versus Y. If that was a conventional loan, you're just going to get an appraisal that comes in less, and that's that. So
Thank you so much. Joy would like to know, can I buy another house using my active duty husband's VA loan while I am using my VA loan for our current house? He should have his own entitlement, right?
Yep. And as long as he's going to owner occupy or she's going to certify occupancy, yes.
Yeah, great. Joy, that's exciting. You have a great opportunity in front of you. Can we use, this is from Angela, can we use two VA loans to purchase a commercial property?
cannot use a VA loan to purchase a commercial property.
That is the restriction, because you can't have the intent to occupy a commercial property because it's not residential.
Yeah.
So
I purposely jump in front of Michelle on the easy questions.
Jay says, I signed up on the form, but what if you want to buy a relative's house that's not on the market yet because they only want to sell it to you? Do they need to still list the home to use the loan? Oh, good question, Jay. No.
The house does not have to be formally listed to MLS to utilize a VA loan. As long as you're going to occupy the property, you can go get it.
That's exactly right. And Jay, you can do that independent of a realtor, or we can find a realtor for you in the area who can just kind of serve as an advisor of the transfer for you. Would love to talk to you about it. Would love to help. Sharon, Jay, do you have your strategy session booked? Sharon, what is the best piece of advice you would give to a first-time VA loan home buyer? Match with military connected experts. That's my best piece of advice.
I'm right there with you. It's going to be about finding the loan officer, the lender, the group of individuals that you know is going to take care of you and educate you through the process.
Austin, you have anything?
Yeah, I was going to say, book a strategy session.
Book a strategy session is Austin's advice, Sharon. Okay, everyone who signs up for the strategy call, attends, and allows us to help support you is getting a Stanley tumbler. So that's how we're giving those away. I saw people asking for them in the chat. So with that, thank you so much, Michelle. And thank you so much, Austin. The key to meet with them is the strategy session link. So if you want to talk with them, we've got to get you scheduled. Michelle and Austin, is there anything else that you'd like to add today?
Thank you guys so much for having us, sticking with us for the better part of an hour and a half. Love this. Don't be scared. You've got an incredible team with you, with MMLS right here with us. So happy to be partnering together.
Awesome.
Yeah, thank you everyone for coming. Obviously, all the veterans on the call, thank you for your service, and the military spouses, thank you so much too, because your sacrifice is not going unnoticed as well. So
awesome. Well, thank you guys both so much. You're welcome to hang out if you want. We're going to sit here and work with everybody to make sure we've got scheduling happening. All right, talk to you soon. We'll see you on the next VA Loan Bootcamp. Thank you for watching this episode on the VA Loan. I'm here if you have questions. Reach out to list@themilitarymls.us, or I respond to all of the comments on these videos personally, and I would be happy to answer your questions. Please remember to subscribe and turn on notifications regarding our channel so you don't miss our next video. It's going to be a banger. I'm excited about it, and it's going to really lift you up and support you in the remote workspace. Talk to you soon.